So here is our technology top market cap moving average trend bull call strategy, right? So we're just looking at the top market cap stocks and technology, and we're using a simple moving average trend here for a bullish setup and calls. As you can see here with the daily P&L metrics, we've had some nice days and we're kind of giving some back here. Market is kind of going through, a little bit more of a slower grind consolidation period right now. So that's not unexpected. Things like that are going to happen. It's only got a pretty low win rate right now, but we just started running this. It's looks like a 14.33%, but you can see here the power of options, right? So even though you have a tiny low win rate, not exactly the best market for this strategy, as we've kind of went sideways to a slow grind higher versus that bigger move earlier in 2025 that we experienced, where this would really outperform well. So this is more of a daily kind of setup here, and it's going to struggle when you have kind of low trend environment, right? Like a chop low trend. But that's not to say that it's a bad strategy. It's a pretty good strategy overall, and it should play out over time. So let's just take a look here at the top technology market cap, and it is still positive even in this environment, right? So and today it's taking a bit of a hit. It was up actually pretty nicely at the start of the day, but today we're seeing a little bit of a reversion in markets here. Um, we do have a geopolitical risk with the Iran-Israel conflict. So, things happen, and that's why we have risk management parameters in here. So start time, we're just going to take the start time, opening start. Got a loop going, so whenever we do get a signal, we can get into this. And then we're just looking at the top 25 symbols. So every kind of name that you might think of, right? Microsoft, Apple, NVIDIA, Broadcom, Taiwan Semiconductor, Oracle. Look down a little bit lower, we have, Qualcomm in there. Arista Networks, even MSTR, so MicroStrategy, Uber, IBM, you name it. We look at the top 25 in tech with some liquidity parameters built around it, right? We want to make sure that these stocks are highly liquid, and then the options are also highly liquid. So we just have a multi-moving average trend here. We want price to be above the 2650 and 200-day moving average, and we want the volume to be 1 million above that 20-day average, which all those stocks should have no problem meeting. And we're just going to simply buy the 180 DTE, so days to expiration, so 6-month call option here at the 60 delta, and then we have it at the mid and S so that we can get in this trade. And we want to make sure that the open interest on that line is at least 50. So we're not creating the open interest. We don't want to be the only person in there. And then simple, when price crosses below that 50-day moving average, we want to get out of this. We want to make this a very simple strategy. We really don't want to be in anything below that 50-day because then there's lots of risks to downside potentially to that 200-day moving average. Sometimes you're going to get stopped out and it's going to rebound right away. Not a big deal, because we want to protect that downside. So that will go out immediately at market. And otherwise, we have 125% we're trying to capture here on with a 40% stop loss. So a nice 3-to-1 risk reward ratio here. And then, we want to force the close at market order 1 hour before day of expiration. All right. If you do have any questions, feel free to reach out to the Option Circle team. We'll gladly help you. Thanks, everyone.